So the much anticipated FOMC meeting has officially kicked off. We are just 24 hours away from hearing the next US interest rate decision, and this could trigger whether the crypto markets see broad rallies across Bitcoin and major altcoins. What is it we're looking for? What is the game plan? What is most likely to happen from the Fed? We're going to break that down and a lot more. Don't forget to smash the like button. Don't forget to subscribe. As always, check out the links in the description if you're looking to buy any cryptocurrencies. BYBIT and BitGet, links below are the two exchanges I use. Now, as you can see, Bitcoin since early October ran as low as 18,100. We are now sitting at 20,500 in a much different place. And fundamentally, what has triggered that is this notion, is this idea that the Fed, the FOMC, will suddenly decide to switch their stance. In other words, a pivot. Now, what is this pivot? This pivot is this idea that they're going to go from tightening and more aggressively tightening to starting to slow the paces of the interest rate hikes. As you guys know, we've been seeing pretty much not unprecedented, but not often seen 75 basis point rate hikes happening. We've had a handful of them already, right? These have not happened since 1994. 50 basis points is a fast rate hike. 75 basis points is extremely fast. So what the markets are now expecting is, will we finally see that pivot, or will we even see some discussion around that pivot? As you can see, markets, 90% of the markets have priced in that we're going to see 75 basis points tomorrow. I'm expecting 75 basis points tomorrow. Anything less than that, if we see 50 basis points, this market will go crazy. We will get a crazy crypto rally, and I'm all in for that. I will be really excited to see something like that. Do I expect that to happen? No. That is an edge case. You can see about 9% of the market are pricing in that case right there. The vast majority are pricing in the 75 base point rate hike. Remember, this is interesting. After we got the last CPI reading, which missed, by the way, expectations, although it was coming down slightly, some of the market had priced in 100 basis points. So it's interesting to see that over that month, because this FOMC meeting is quite late, it's in November, so throughout October, you saw that the market then started to rotate. It unpriced in 100 basis points. Majority of the market's price in 75 basis points, and that's why we're sitting where we're at today. But it's not just about the interest rate hike. We're going to cover that off live tomorrow together, so make sure you subscribe, make sure you got your notification bell on, and we'll watch how the markets move when that interest rate decision is made. But what's more important is the bit thereafter. And that is when Jerome Powell addresses questions during his press conference. And what we're looking out for is we're looking out for any notion that he talks about when we could see a slowing of the rate hikes. If you look to the December the 14th FOMC meeting, which is the next one, you can see that 55% of the market are pricing in 50 basis points after a 75 basis points today, okay? So a lot of the market, half the market, is expecting that slowdown to happen in December, which is why we're getting this green in the market, this euphoria starting to drive us back to the upside, because people are starting to think this is the worst. This is the maximum rate hike. We're not going to see 100 basis points. We may not see 75 basis points again after tomorrow's one, right? And that is why the market's trying to think a couple of months ahead, one FOMC meeting ahead, to price that in currently. This is all gamesmanship. People trying to beat each other to it and position their portfolios before the inevitable. I mean, once they announce their pivot and they announce 50 basis points, it's already going to be priced in. Just like you can see here, what this is showing is using the CME futures, and the CME futures have already priced in 90% the idea that we're going to get 75 base points tomorrow. So you're not going to get any reward from trading that tomorrow. It's already priced in if you get 75 base points. 50 base points is not priced in, which is where you're going to see your crazy rally. Also, where you can see that crazy rally is if he speaks about 50 base points in December. Markets will like that. There are going to be a lot of trading opportunities and some greenness in the market if we see. Now, what are the risks? The risks are, can we see a 100 base point shock? It's possible. I don't think it's probable. Very unlikely. I mean, you can see it's not priced in here. People are not expecting that. But remember, what's not priced in can shock the market. So be wary of that. If we do get that 100 base points tomorrow, you could see a lot well, you will see a lot of pain if you see 100 base points. I'm not expecting it. The other thing which can shake markets, and this one's a bit more realistic, is if Jerome Powell does 75 base points tomorrow, fine, market will be like, okay, we expect it. It'll be slightly red, but we'll expect it. But then he comes out really hawkish, and he doesn't come across dovish. He doesn't talk about the fact that we may see 50 base points next month, or that we can look to slower, and he continues to say we need to be strong, things are not better yet, etc., etc. Okay, now if he does that, we could see redness in the markets tomorrow. Now, there's one breaking piece of news which kind of gives us a hint at what Jerome Powell could be thinking, and the Fed officials today, because remember, they convene today and we get the decision tomorrow. What interesting that this news breaks today and it's completely unconfirmed, so we've got to be careful. But there are rumors going around from people well informed in the space that China markets could be looking to exit their COVID zero policy, which could be really, really interesting. Remember, this whole issue around inflation, this whole issue around CPI is a rising of prices. Now, a rising of prices can be demand-led and it can be supply shock-led when there's not enough supply. Now, we know that what Jerome Powell can do is only tighten the demand side. He can increase interest rates, which make it more expensive for you and I to go buy that fancy car or that holiday or even that loaf of bread as it currently is going. But what he can't control is the supply side. But this is a real good indicator. If this can sort itself out, if this COVID zero policy can come to an end and Chinese markets can start to open back up again, we can get the supply chain picking back up again, and we should be able to see that have a big impact on bringing inflation down. So what Jerome Powell will not want to do, if we're just trying to think ahead of what he could be discussing with his team today, what he would not want to do is raise interest rates again aggressively, 75 base points, or God forbid 100 base points, only for the supply side to improve. You've hammered down the demand side, and then you enter a period of stagflation, right? Where you've really damaged the economy, you've driven it into a recession, but at the same time, you've got inflation coming down. So this is something we have to keep an eye out on in the markets. Very, very important. Now, let's take a quick look here at the Fear and Greed Index, sitting at 30. Markets are feeling very confident. They like this level at 20,000. Remember, earlier in October, you were at 18,100 range on Bitcoin. So people feel a lot more confident. Incidentally, you're seeing the US 10-year yield really spike down. I mean, we were up here at 4.23. It's come down now below 4. So a big fall here. Again, remember, think of the US Treasury as your risk-free, right? When people are scared, they flock to Treasury. So again, that's why we're seeing some of that, which is very, very interesting. Let's also take a look at the wider markets. And sitting here on the pre-market, we're seeing some green action, right? NASDAQ up 1.2%, S&P up 0.9%, and the Dow Jones up 0.6%. And they're looking good. People are feeling quite positive about this meeting because we're in this situation where it's unlikely that the Fed can shock us quite hugely. The market's already priced in the 75 basis points, and so we can look to start to unwind that as and when it gets announced. Let's now take a look at the Bitcoin chart, because from a technical perspective, we've seen some interesting things start to play out. If you remember when we were looking at this chart yesterday, I said we have to prevent this double top pattern. Okay, this is what I was worried about as we were heading down towards here. Thankfully, we collected some support. Now, where did we collect some support for? Well, let's zoom out. I'm going to zoom back out to the 4-hourly. Remember this triangle we were in? We were in this ascending triangle, and we broke down, right? Now, if I continue that line from our triangle, I can continue that all the way there. And from the top of triangle, I continued that because that was the resistance line here. We've now managed to turn this into support, which is really, really good. If we can hold this level, that is good. But I want to see us post a higher high. We have to work our way to a higher high from a technical perspective. Otherwise, the risk remains. We could be coming down to 20 and still forming that big M pattern when we come back to 20, right? Now, if it's not a clean M pattern, this could be something called an inverse Adam and Eve, where it curls over like that. Okay, so this is something I'm worried about. We need to hold this level, like you can see the red candles here currently. We need to hold this and go and post a higher high, higher than this high and higher than this high here. That's what we need to see here from a technical perspective. Now, of course, we know this is a macro-driven week. Loads of macro stuff going on. We've got our JOLTS figure. We get our non-farm payrolls on Friday. Obviously, the FOMC meet tomorrow. That's going to shake up some of the technicals, but that's where we're looking at here. Now, if we see some down results from the FOMC meeting, if we see that Jerome Powell comes out and wants to shock markets, I'm looking at us breaching 20,000. I'm looking at us coming back into this range. Maybe, I don't think it's going to go drop that quickly to 18,700, but definitely coming into the 19,000s, at which point maybe I'll do some nibbling. But again, I'm not too desperate to be dollar cost averaging in. I've been lucky enough to be accumulating closer to the 18,700 level. So for me, it'd have to get closer to this green line for me to be looking to add to my bags. But if I didn't have a bag or I'm new to crypto, I would definitely be loading up at these points. Of course, do your own research. But that, for me personally, anything below 20,000 on Bitcoin is an absolute steal. And in the long-term scheme of things, I would be gobbling that up if I didn't have a portfolio built. In fact, if I just enter crypto right now, what an amazing time to be entering crypto. You still got these once-in-a-lifetime opportunities, really, to be loading up at these levels. What is the positive scenario? Well, the positive scenario is if we get what I just discussed, which is we get our 75 base points. I don't think we're going to see 50. If we do, boom, let's just moon, right? Then all bets are off. We could be forming our W pattern and getting out of here. But if it's just 75 base points with some clues around maybe laxing these interest rate hikes in December, then I'm expecting us to go through 22,000, try to hold it as support, and work our way onwards. That is the next mission for Bitcoin. Because if we look at it from a broader perspective here, this is the top of the channel. See this green line, which we've kept since June, and with June lows of 17,600, we were channeling for a very long time. We broke up previously, and then we got rejected around the 24,000 level we came back in. So for Bitcoin, I'd be looking to get to 22,000, hold it as support, very important. We don't want to do what we did here. If you look here at the last meeting, ran up here and got thrown back down. We want to make sure we hold it as support and then mount an attack towards 24. 24 is a very important level. Remember this big W pattern we're monitoring? That's the neckline of this big W. So that is what I'm monitoring here. Can we work our way to 24? Then things can get excited for this relief rally to really continue up towards 28, 29. But we're going to need the FOMC meeting in our favor. We need to hear some talks and some solid talks around pivoting. Now, the interesting thing is we've had some Fed officials in the lead up saying that we do need to see some laxing of interest rate hikes. We need to start slowing down at some point, otherwise we're going to risk damaging the economy. But the other thing we need to keep an eye out is what is the terminal rate? Because currently the terminal rate could be sitting at around 4.75. Will they increase that to 5.25, 5.5 kind of range? That's the other question. There's two things we're discussing here. How big are the rate hikes and how long are they going to be hiking for? Because what the Fed may do is switch tack to stop doing 75 base points, switching to 50, but they may say we're going to rate hike for longer into 2023. So that's another interesting thing for us to monitor. Let's switch on over to the dollar index. And on the dollar index, we have seen some weakness. And there's one thing which I'm happy about, but we need to be very, very careful. If I bring out the EMA ribbon, you can see one thing. We broke the EMA ribbon to the downside. Okay, you can see that. We broke this EMA to the ribbon to the downside. It tried to build its way up, but now we can see we're getting rejected by the EMA ribbon with that daily candlestick today. So that's good news. I want to see this get rejected and form a lower low below these two candles. Okay, so what we need to see from the dollar index, hopefully with the help of the FOMC meeting tomorrow, is this. What I do not want to see from a technical perspective is a green candle, it closing back above its EMA ribbon and charging back on. Okay, so I want to see lower highs. See this high here? Lower high. And I want to see it curl over again. Curl over again. Get yourself sent back down there, create a lower high, and then things get exciting. Because then when I zoom out, if you look at my little diagram here, we're now in a daily downtrend away from our EMA ribbon. And that could sustain a longer term daily/weekly bullish movement on Bitcoin. And that's what we're looking for in this relief rally. We're looking for a daily/a few week rally into our EMA ribbon. Because if we go back to Bitcoin, what we're not saying here, or what I'm certainly not saying, maybe your other YouTube influencer friends are saying something different. What I'm saying here is if I get another chart, this is your weekly EMA ribbon. I'm just looking for a run into it. And a couple of days/weeks, so these are weekly candles, a couple of weeks of positive move coming up here up towards 27, 28 would be a lovely relief rally. But that certainly doesn't mean that's going to automatically trigger us into our next bull run. That can happen, but it's not necessarily the case. So even when you're trading this, or if it's your long-term portfolio, you've got to be cognizant/prepared for another push to the downside. Because until we flip our weekly EMA ribbon bullish, I close a weekly candle above it, we're not officially moving our way up on a weekly time frame. So it's important that what we understand where we're at right now. And where we're at right now is trying to form a W pattern, trying to get a relief rally into our EMA ribbon. And let's just leave it at that for where we're at on this stage. Let's not get too carried away of, oh, Bitcoin's going to get to 40,000, 50,000, 60,000, all-time highs. Here we go. No, let's be pragmatic. Let the data lead us and let's take it day by day because new information is being released every single day. So there you have it, guys. That's my expectation of what to expect tomorrow. We will be live streaming that tomorrow. So make sure you've hit up the join button. Make sure you've hit up the subscribe and the notification bell button on YouTube so you do get notified. We'll be live. We'll be covering it off. We'll listen to the press conference together and see how the crypto markets move. Thanks for joining, guys. Don't forget to smash up the like button and subscribe. Go watch this video here, and I'll see you in the next one.